Thanks for tuning in to Countdown. My name is Neeraj Shah. Over the next hour and 20 minutes, we'll talk all about how today's day is closing, and it's closing well, you would have to admit. Frankly, just pull up the equity indices in the session today, and you will see that there has been largely a day of gains. And even though there was a midday dip of sorts, I think we've done reasonably well. We may not be at the highest point of the day, at least for the Nifty Bank, but for the Nifty and the Sensex, we're doing okay. As I said, the Nifty Bank, you will see that from the peaks, it's come off a bit, but still doing reasonably okay for itself, 226 points. Very quickly, just want to pull up what the world markets are doing before we get to our indices. So Europe should come up on your screen. Let's see the US futures as well. So a bit of green, a tinge of green across the US bourses, European bourses. Remember, they were in the red yesterday. And the Dow futures should come up on your screen as well. Nothing to untoward, so this is actually a good sign. Remember, crude is correcting, gold is rising, so all of that also continues as per script. Bring up the heat map and show you what's moving and what's not on the index. A lot of green, very little red. The globally linked names still correcting. Tata Motors, though, was down about 4.5% and currently just down about 2%. There's some weakness in Sun Pharma and Bharti Airtel, but aside of that, we don't see too many weaker names. But what's doing well is the key thing. So first, Bharti Infra up about 6.5%. I think everything linked to Vodafone and linked stuff is doing well. So you've seen Vodafone, of course, do what it is doing, but Bharti Infra up about 6.5%. Grasim is up about 4.2% as well. So good going. PSUs continue to rise and shine. The likes of Coal India up about 3.5%. And I think the markets are taking notice of the story on Bloomberg.com and BloombergQuint.com, which is about the Reliance Aramco deal moving at a faster clip. That stock is up about 2.5%, gaining support to the markets as well. Some other names like Bajaj Finance, etc., too, doing okay for themselves. Bring up the mid cap and the small cap indices and show you what's moving and what's not there. So AMCs, by and large, are doing well today. Nippon Life Asset Management, about 8.25%. There is strength in Torrent Pharma yet again. Prestige Estates picks up a bit of steam. And Oil India, too, is up. So PSUs, as I said, is the central theme. I don't know if the conversation is around whether the CPSE would be, may not see as much participation or as much offerings, but that's something that is getting the PSU stocks excited. What is corrected today is Future Consumer and Hexaware Technologies. Just very quickly, the small cap indices should also come up on your screen. The Nifty Mid Cap Index and the small cap index up about 1.25%. And the small cap space, you're seeing some NBFCs, Credit Access, Grameen, Equities, etc., doing well for themselves. Radico Khaitan has gained a little bit, and Avanti Feeds is the one that has cracked, are down about 8% in trade. But interesting afternoon of trade thus far, Devina. Important to get in some good conversations as well now.
Yes, but before that, I just want to highlight two other stocks. One is Irctc, and the stock's up about 8.5% today after yesterday's big bumper 8% move. So that's now approaching 1,800. And the second stock, we'll probably at some point claim credit for this, but Vinati Organics is the stock that is up in the session today. It's up about 4.5%, and the primary bump up that came in post the interview with BloombergQuint, where the management of Vinati Organics clearly clarified that there is no negative impact with regards to the supply on the back of coronavirus. In fact, their competition in China is getting impacted, because of which they are the ones benefiting and they are the ones getting more inquiries for that particular chemical. So that's one thing to watch out for. Anyways, we'll talk about all of that and more. Let's get into Market Voice. Vinay Pandit of IndiaNivesh is joining us right now on the show. Vinay, thanks very much for taking out the time. Let's first get your broader sense on what's been happening, the overall market mood and sentiment.
So broadly, if you see, there's a lot of interest in the large caps. There's a lot of interest in liquid ideas. And there's a lot of interest in quality, good corporate governance stocks. That's where we're seeing investors lapping up equity available as and when it comes up for dilution. We've seen DMart. They had an OFS, they had a QIP, everything got lapped up pretty fast. We've seen Irctc moving up leaps and bounds. They're showing strong performances. So overall, if you see, there's a lot of value being given to quality in the markets right now. And that's where all the float is gradually disappearing. And as and when there's any investor coming in to buy in large chunks, you're seeing stock prices moving up beyond fundamentals. So a lot of these companies, a lot of these stocks will continue to be expensive. That's more got to do with the less availability of float, a lot of demand in quality counters, and companies continuing to show good earnings growth as well.
What's your assessment of the earnings growth by the end of the year? I mean, quarter four is going to be another pressure point if coronavirus and the issues continue. May not be so much so for Indian companies, but if you do see a negative mood and sentiment around global equities, India doesn't tend to go unscathed.
India is not decoupled from the world, frankly, in the real sense. But coronavirus plays out in two ways. So, for example, on the chemical side, there are several chemicals which there is almost 30 to 70% dependency on China, 30 to 70% dependency of the imports that come into India. And these imports could very easily be anywhere between 30 to 100% of what is the local requirement or the consumption. Now, what happens in these cases is there's definitely going to be a supply hit, and I don't think the coronavirus is going to die down too soon. It's going to take at least 1 or 2 quarters before which the supply can be restored, the manufacturing can come back to normal. And until then, Indian companies do tend to benefit in terms of pricing wherever they're competing with these Chinese companies globally. It'll be a bit of a hit. For example, calcium carbide, a raw material that's used in steel making, right? You have a significant 100% dependency on China on that product. There are several other chemicals that also come in almost 50 to 80% in the F&B space, in the adhesive space, in the paint sector, in the adhesives sealant sector. So all of that is going to take a bit of a disruption. Some Indian companies like Irctc Industries, who are doing a lot of it, zero dependency on China, significantly indigenized, would definitely make money out of this. You've seen prices going up for APIs, you've seen prices going up for intermediates. They'll tend to gain. Companies like Sharda Cropchem, 90% dependency on raw material coming in from China, going to take a hit. SRF, Naveen Fluorine companies which are dependent on fluorspar supplies coming in from China, they're going to take a bit of a hit, but they'll have to manage alternative routes to get in these raw materials from Southeast Asia and other countries. So it's a mixed bag kind of a thing. So for example, compressors. Now, compressors, almost 50% of the requirement of compressors or the import of compressors into India comes from China. You've got South Korea and other countries as well, Indonesia. AC companies have already bought in their inventory, right? Now they bought in this inventory assuming that 15% will be the air conditioner sector growth during the summer season. Now, if summers are strong and this air conditioner sector growth goes to 20-25%, they'll have to really scramble to source these new set of compressors or source in extra compressors from countries other than China. And that's where I think a lot of logistical play would come into play for a lot of these companies.
Any companies telling you that it will be a issue of no supplies versus an issue of expensive supplies? Is there a conversation like that, especially in the air conditioner segment? Because we don't know how it will shape up. So will the companies have to source expensive compressors, or do they believe that it will not come at all?
So as of now, like I said, the air conditioner companies have sourced their compressors. The season supplies would start anywhere in Jan and Feb, so they've stocked up.
Okay.
This has happened in anticipation that 15% volume growth would be seen this season. Most of the air conditioner companies plan their production based on that.
Sure, okay.
And if this 15% goes to 20-25% is when they'll have to scramble to kind of find the alternative sources of compressors.
Okay.
But then they've got alternatives as well. They've got Indonesia, they've got Korea, they've got Japan.
Okay. I have a follow-up. What we've seen in the last few weeks is as you said, the dearth of quality names coming in and therefore buying happening. But so we all know that Bajaj Finance, etc., Hdfc Bank, etc., see buying. What we've also seen, some of these mid-sized names which are got these niche business models. You spoke about air conditioners, so Dixon, by virtue of the back-end manufacturer doing well. Irctc has been on a roll after the numbers. Credit Access Grameen, a nice. So these internet-based players, back-end manufacturers, etc. When your large clients who you cater to, which of the mid-sized pockets are they talking about the most actively that they are keen to buy, never mind the valuations?
See, I mean, it's a catch-22 over here, right? I'll tell you why. I mean, SEBI's done a classification and said that your 150 stocks are mid-caps, everything else becomes small caps, right? Still, we've seen a lot of interest for companies going up to 2,000, 3,000 crore market cap. The problem is of size. Mutual funds, insurance companies, the kind of flows that we've seen, right? 4,000 crores of SIPs in 2016, January, and 8,300 crores of SIPs in Jan 2020. There's crazy money coming into SIPs. There's a lot of money coming into insurance, right? where do you deploy it? How many sources do you have? So you are doing that. The point is that after a certain size, the stock becomes illiquid. Investors have to take 10%, 15% impact cost when they're buying into these kind of stocks. And that's where you start imagining that, do I have a 40, 50% upside in this company? Can I take a 10% impact cost in buying into this stock, you know? And that's where you've got individual plays. Nothing sector specific, you've got individual plays. So as you go down the order in terms of market cap, you've got investors looking at individual plays. So for example, like you said, Dixon, Umber Enterprises, AI Engineering, a lot of these stocks, they are individual stocks that people are looking at, not sector specific.
I want to know if you have a view on SBI cards. That's going to be the next big thing that's coming.
Not as of now, we're still working on the data.
Okay.
Do you think SBI benefits out of it though?
Partly, yes.
Is SBI on the buy list? That would be my question again. I mean, just wondering, you got the last question really on this interaction, but do you think you as an institution are going out and telling your clients to go out and buy SBI? Because it's that classic case of how every quarter there is optimism around SBI, only for it to find some other skeletons, and therefore you don't see the stock price really tally, even though the optimism may be abound.
It's just stuck at 320, 318, 350.
So you can call it a nice defensive bet.
But it does fall. That just doesn't rise.
It moves up and down on a regular basis, I think. Whenever there's a positive development coming in the sector, you've seen that is one of the first stocks that moves up in the PSU banking space. And within the PSU banking space, I think SBI stands out, right? Otherwise, you straight away, you start with PSU and you immediately move to private. I mean, okay, what are the banks you like? You like SBI and you straight away start with names like ICICI, Kotak Mahindra Bank, HDFC Bank. So that is the stock that definitely you cannot avoid having in your portfolios. Would definitely benefit on valuation terms because of SBI Card's IPO coming in. But I think slowly and gradually the NPA issues dying off would definitely show up significantly in companies like SBI.
Okay.
All right. And then we leave it at that. Thank you very much for
Pleasure having you.
Thanks.
All right, moving on to the next buzzing pocket. Pharma stocks are active in today's session thanks to the move in Aurobindo Pharma, which is seeing its biggest one-day move in the last 12 years. The company's Unit 4 has received an establishment inspection report from the US FDA with a VAI status. So let's discuss the prospects for Aurobindo going forward, as well as take stock of the pharma space as a whole with Kunal, the Mesha of SBI Cap Securities. Kunal, thanks very much for taking out the time. Let's talk about Aurobindo. Obviously, the severity of this observation is not all that intense, and therefore the relief for the stock. But what lies ahead now for Aurobindo Pharma?
So I think Unit 4, everyone expected severe action from FDA given the number of observations. However, they have been able to dodge the bullet through their response. So what we see is the Form 483, which is just the one half of the story. The real half is how the company responds to that Form 483 and how FDA perceives those corrective and action and planning in how they view it. So based on that, FDA kind of takes an action into VAI or OAI, and given the response I think they would have submitted, FDA classified it as VAI, which was very positive for the company, especially from the point of view of the future growth, because that plant has around 1/3 of the ANDAs pending. Yeah, so around 30% of the pending ANDAs are from that plant.
So how do you, what do you budget in now as somebody who's looking at this company? What do you budget about what could happen to Aurobindo? Obviously, the street has taken a liking to this announcement with the kind of gains that it has done. What happens to business going ahead?
So it removes the uncertainty in terms of future growth. So as I said, it accounted for 1/3 of the pending ANDAs, which means that the future growth in the US business is well intact with the VAI on this plant. And as of now, there will be no downgrades because everyone expected the future ANDAs to come into play in terms of future growth, and given the VAI status, there will be no downgrade. But from here on, I think the successful response to this plant also kind of brings positivity on the some of the other plants which are currently under OAI or warning letter. So one of the biggest one is Unit 7, which is currently under OAI. The company is doing remediation work there. It is one of the biggest plant for Aurobindo, accounts for around 15 to 20% of its console revenue. Currently it is under OAI, so I think people would now think that it would be positive also, because the company has already started taking remediation action. Another important plant is Unit 11, which is currently under warning letter, for which the company has already completed the remediation work and they have already invited FDA for re-inspection. So another catalyst in the near term could be the re-inspection of Unit 11, and resolution of warning letter would be further catalyst for the stock.
Okay, Kunal, the larger pharma space as well. I mean, thanks so much for this Aurobindo intakes. Now, just one quick perspective. A lot of, I mean, maybe pharma at large may not be doing well, but healthcare as a space has seen its share of gainers, isn't it? I mean, we've seen this Apollo hospitals having a fabulous run. Some diagnostic companies also have done reasonably okay. So healthcare is doing well, even though pure play pharma may not. Within your coverage universe, what would be the top 1 or 2 names that you believe you have a conviction that could create wealth for shareholders going ahead?
So in my view, so I currently have only pharma coverage, and within my coverage I have most conviction on Dr. Reddy's and
yeah, please carry on.
Yes, in the pharma, I don't have healthcare coverage as of now. Yeah, so Dr. Reddy's is the one on which I have the most conviction, followed by Aurobindo.
Okay, so Dr. Reddy's followed by Aurobindo. Thanks very much, Kunal, for joining us. Really appreciate you taking out the time this afternoon. All right, that's a quick take on the pharma space, and particularly Aurobindo Pharma, which has had a smashing run in today's session. I think most in 12 years. That's really something to go by. 594 for the stock right now. Heavy volumes at that too. Let's get in the let's get going with our trading wheel. Bring in our technical experts. Manav Chopra of India Bulls Ventures is joining us right now on the show. Shortly, we'll have Aditya Agarwala as well. Manav, but let me come to you first on the index. Few days of pain. Today has been an incrementally positive day. Banks have supported. Do you feel like it could be, positional long from here?
See, the markets have been quite choppy recently. Also on the daily charts, we have seen important breakdown, at least on the daily perspective. And tomorrow being a weekly expiry, there are some very strong resistance on the upside, as we have seen important call writing at the levels, and there are very limited unwinding happening on the upside. So I sense for a very short term, one can maintain a neutral to negative bias. For the Nifty on the lower side, the support would be at 12,000 and the resistance is 12,150. So beyond this trading band is when we can expect some sort of a trending action. Looking the current structure, the Nifty, if breaches 12,000 is when we should actually look to close down our positional short-term trading ideas or even a medium-term ideas in that case. For Bank Nifty on the lower side, 30,500 is the important support area and 31,000 is the resistance. There has been the open interest data suggests that 31,000 has 70,000 contracts currently, and we haven't seen any unwinding happening at that area. So I expect, at least for the near term, this to be a short-term ceiling on the upside. And similarly for the Bank Nifty, there has been a good amount of weakness coming from the PSU banks. So that is one space where we could see some sort of a underperformance, and could be one of the sectors which could actually drag the Bank Nifty on the lower side. So 30,500 for the Bank Nifty would be a make or break levels for the bull. So these are the levels to watch out for to take any positional trades. So for now, I think we can expect a choppy biases in the markets, at least for the near term.
Aditya Agarwala of Yes Securities also with us. Aditya, Manav's point is well taken, and therefore my question to you, with the kind of changes in the OI or otherwise that you would have seen, or levels that you would have seen, what would your trading position be on the indices today?
So at the moment, I would not go for any long trades or short trade for that matter. We've seen a 200-point rally from yesterday's low almost, and it's coming to that 50 DMA where it will face resistance. It's almost tested that level of 12,135 to 12,140. That is the resistance zone. It also happens to be the 61.8% Fibonacci retracement level of the fall from 12,240 to 11,900. So overall, my sense is market will not go into a long trade at the moment. Probably a pullback to levels of 12,070 to about 12,040 on the downside. Could be a good level to enter fresh longs in the market for targets of 12,140 on the upside. At the current juncture, I'll not go in for any long trade on the Nifty per se.
Okay, no long positions on the index. So I assume the same will be the case for the Nifty Bank?
Yeah, definitely. So same goes for Nifty Bank. Rather, it's been underperforming Nifty. Nifty has witnessed a sharper pullback as compared to the Bank Nifty, and it faces stiff resistance in that zone of 30,900 or 31,000 on the upside. So unless it crosses that level of 30,900, I'm not going long for Bank Nifty. On the downside, 30,600 is a strong support zone. So it will oscillate between this zone of 30,600 to about 30,900 on the upside.
Okay, stock ideas then. Aditya, let's start with you.
So it's from the broader market. Broader markets have been doing well. The first stock is Torrent Power. It's a beautiful breakout on the stock and went through a consolidation, a minor correction as well, and it's resumed its uptrend in trade today, and it's looking extremely healthy on the charts. So I'll go long on Torrent Power for a target of 335 with a stop loss at 309. The second stock is LTTS. It's a beautiful triangle pattern which is being formed on the LTTS, and it's on the verge of a breakout from that triangle neckline. So I'm preempting a breakout on LTTS. My sense is once the breakout happens, it will be a swift up move, and you will not be able to catch that up move. So preempting a breakout and a long on LTTS at current levels for a target of 1870 on the upside with a stop loss at 1625.
You know, the street is bullish when they start using words like beautiful and good-looking patterns on charts. They don't normally talk about this when the stocks are going down. Manav Chopra, are you seeing any beautiful patterns on the stocks that you are recommending today?
The stocks that I'm going to recommend, definitely they are quite well placed. I would term the word beautiful for the woman. So going with the chart patterns, in that case, my first pick would be on PFC. The stock has definitely formed a very strong structural pattern, and it has very important support areas on the lower side, which is close to the levels of 125. And importantly, there has, looking at the weekly structure, we are expecting a good weekly close, and even the oscillators are too confirming a range shift, which is quite positive for this stock going forward. So it's a buy with a stop loss of 124 for an upside target of 140. My second buy call is on Birla Corporation. This is the pick that I had also recommended last week. Not much of a momentum since then, but the stock is still holding on to its important support zone. It has key support levels at the levels of 730 on the lower side, and in past few months we had seen a very strong weekly move which confirmed the trend reversal formation, and post that it is consolidating its gains. I sense that from here on Birla Corporation will continue its upward trajectory. So buying this stock in a consolidation move prior to a breakout would actually give good risk reward ratio even at the current levels. This stock is a buy with a stop loss of 720 for an upside target of 810.
Okay, Mr. G. Chokalingam of Economics Research and Advisory is also joining us on the show this afternoon. Mr. Chokalingam, thanks very much for taking out the time. Before we talk about the broader market space, since we've got a buzzing pocket, which is the specialty chemical space, and the fact that we've also got, some positive comments from the management of Vinati Organics, is this a stock that you would like to be a part of and you would like to make allocations to, considering that the overhang with regards to coronavirus has been completely denied by the management?
Yeah, but earlier I had seen some interview of management that maybe another 1 or 2 quarter, there may not be big upside to the margin. I would, wait for another 5-10% correction at least before, accumulating Vinati Organics, because the valuation is not cheap, and 2/3 of the chemical space going through the tremendous pricing pressure. Whether you talk about, caustic soda, graphite, many.
Mr. Chokalingam, I request you to hear out what the management told us today as of this morning, and then tell us what you think about it, because the management did speak and said that there will be no impact on coronavirus, and also give us some sense of what the quarters ahead and immediate quarter one could look like as well. Hear him.
First of all, none of our raw materials, let alone the key raw materials, even the less important raw materials, are imported from China. So as such, speaking just from our company's perspective, this coronavirus issue has no disruption on our supply chain availability at all. Now, secondly, how it affects our company is in two ways. Now, for our main business, which is ATBS, the specialty monomer used to make various polymers, in fact, China is a competition for that product. And we do hear from sources that there might be disruption from our competitor in China because of coronavirus, and that is why we are seeing more inquiries being floated for ATBS, and we are expecting Q4 for ATBS to be better than Q3. Then coming to our second product, IBB, which is the smaller portion of our revenues, there of course we have a customer for ibuprofen in Wuhan, in Hubei province, which is impacted by coronavirus. But subsequently, what has happened, because that factory has shut down, the other factories across China as well as across India, the other producers have increased their ibuprofen production. And to make ibuprofen, IBB is the key raw material, and we have the largest supply. So as such, there is no disruption in the IBB market also. So going forward, we expect Q4 to be better than Q3. And of course, April onwards, our new expansions will come in place. And so we are expecting 15 to 20% revenue growth. In fact, the demand for our products goes up because China is a competition for us. See, most of our customers are based on contractual pricing. I don't expect much of a pricing change in the short term. Of course, certain spot demands, spot customers that would come to us, because if at all our competitor in China gets affected, if this issue remains prolonged, we will see some limited spike in the prices, but not much. Now, again, coming to IBB, we see demand from other customers going up simply because the factory in Hubei province is closed. I would expect revenue growth to be in the range of 15 to 20% in the next 3 years. Now, the reason we are expecting such revenue growth is because we are getting into new products. We've set up a new factory to make butyl phenols, which is a completely new line for us, and nobody in India is manufacturing those products. And those you should see the full effect from those products starting FY21, and that at full capacity, that itself has a revenue potential of close to 350-400 crores.
All right. So that is, Vinati Saraf talking about how there is no negative impact of the coronavirus. They're going to see revenue growth of 15 to 20% because of the new products that they've entered into. Street was pegging in a slightly higher number of closer to 22 to 24%, but they've got a lot of products in the pipeline. But once it kicks in with full capacity, it has the potential to add about 350 to 400 crores in terms of revenues for Vinati Organics. Mr. Chokaling, we stopped you midway, but I guess this is the most latest that you can hear in terms of management commentary. What's your sense now?
Yeah, it's certainly reassuring. 15% minimum growth, if management is predicting for 3 years in a row, certainly reassuring. There is no doubt at all. So investors can definitely look at it, but today it has jumped to 5%. So whenever it shows any modest weakness, also one can use that opportunity to accumulate the stock.
What would you do, Aditya, as a trade?
I would wait out for some time. There's a good up move in trade today, but I would wait before it crosses 1050. Above 1050, a fresh long can be initiated. Okay, above 1050, it's 1022 now. A few other movers in trade today. You've got the likes of Deepak Nitrite, which is at 490. It's had a good run. 1780 on IRCTC. Manav, do you have a coverage on any of these two? IRCTC data points are extremely low. You don't have too much to go by, but just the sheer momentum that's pulling the stock along.
Yes, absolutely. Looking at the charts of IRCTC, one thing is very evident that adds on to the momentum is that the stock is continuously forming a series of higher highs. And in that case, the volumes too are confirming the same. So it definitely indicates that even the short-term indicators are in the overbought condition. This momentum is likely to continue on the upside. and the structure still indicates that there could be some more legs that which could see the prices going higher. So in that case, on the immediate basis, 1720, 1740 would be a very short-term support zone where we could see some sort of a cushion in case of a decline, but eventually we expect this up move to continue. The next immediate targets that we are looking is close to the levels of 1850 to 1900. The other stock that you mentioned was Deepak Nitrite. In fact, this is one stock which have seen a very good amount of a rally, but even at the current levels, I sense it's good time to book some partial profits. Given a choice, 460, 450 are the important support areas whereby one can look to reinitiate long positions at the current levels. So overall, both the stocks are very well placed for short-term to medium-term up move.
Short-term to medium-term up move on these counters. It's a good one. Deepak Nitrite at 489. Mr. Chokalingam, anything that you like in particular? I mean, there are a lot of individual stocks that we are focusing on and that have shown tremendous pricing action, but also on the back of the fact that there is very limited free float. So you have to take that hit on the pricing if you want to be you want to deploy money into those kind of low free float stocks. But anything that comes to your mind as a fresh investment?
Yeah, you are right. I mean, low float stock, particularly in the top 250 categories, are moving up. Instead of chasing them, one can definitely look at quality mid-cap stocks. The one stock I can recommend is Dhampur Sugar. I firmly believe that this can create a significant wealth in the next 1 year. Because, if you look at ISMA statistics on sugar output at all India level, it is down by about 30% across India. Among all the major producing states, only UP state is able to increase the sugar output by 3%. All remaining states, the sugar output is down anywhere from 12-15% to as much as 50% in the current season, crushing season, which would mean UP companies would be in a better position to sell larger volume at a higher realization because the domestic price is already up. Even the international prices have recovered. There are reports of with government giving 10,000 rupees subsidy. Now the export also has become profitable. So all put together would favor Dhampur Sugar, which has got all 4 sugar mills located in UP state itself. So, and I am expecting anywhere around 45-50 rupees EPS for FY21. So even if I multiply that by anywhere from 6 to 7 PE, the stock can give 40-50% upside minimum. So therefore, I would strongly recommend Dhampur Sugar.
Okay, we will watch out for some of these names as well. By the way, as I look at the broader end of the spectrum today, there is strength in Hdfc Amc and Nippon Life Asset Management as well. 3350 rupees for Hdfc Amc, but Nippon Life Asset Management is the one which is really spurted. And if you look at the last 1 month returns between the two, I think you will see that there is a big return deviation between Nippon Life as well as HDFC. 22 to 23% for Nippon Life. HDFC AMC has just given returns of about 2%. So there is a bit of a disconnect between HDFC AMC and Nippon Life. However, the other big news of the day today is the new entrant on the Nifty 50 Club. Shree Cement will replace private lender Yes Bank as part of the index from March 27th, 2020. Nikki Mirchandani Johnson to tell us what sets the new Nifty entrant apart from its peers. Nikki, good afternoon.
Good afternoon, Neeraj. Well, if you look at the top line performance of Shree Cement, the 5-year CAGR at least of revenue, that exceeds to all the peers that the large cap counterparts rather, be it in likes of Ultratech Cement or for that matter ECC, Ambuja. The CAGR for Shree Cement sits at around 17% as compared to 13% for Ultratech, 6% for ACC and nearly 4.5% for Ambuja Cement, and Dalmia Bharat at around 7.25%. So clearly you can see that amount of outperformance coming in when it comes to the top line numbers. Even the return on equity has been good enough for the company. If you look at the growth in the last 4-5 years, it's from an extent of 8% to 14%, which is estimated for FY20. So what is really set apart Shree Cement as compared to the other counterparts is first the least cost cement producer among the peers, because if you look at the power and fuel expenses, they have come down substantially, or they've rather been substantially lower for Shree Cement as compared to other industry players. The power and fuel expenses sit around 619 rupees per ton, which is way lower as compared to a 900 rupee per ton figure that you have for all the other pan-India players and Dalmia Bharat for that matter. Essentially this has also got the total expenses cost lower for Shree Cement. It's reflects the company multi-fuel use strategy, the fuel strategy, along with the reduction in power consumption by increasing the power generation from WHR. That's nothing but a waste heat recovery system, because of which the power and fuel consumption goes down and leads to efficiency when it comes to the expenses. Also, the company has third market share overall in India, and it's got a significant, or rather the dominance in North region. Now, North region is the region where you get a lot of limestone. So obviously an operational efficiency also comes in on account of that. But market share, if you look at that figure out there, Shree Cement sits at 8%. Wholesome Group, ACC plus Ambuja combined is at 13%. And if you look at the north capacity that Shree Cement has a capacity of around 24.3 MTPA, Ultratech to a range of around 2025. And you have other players like JK Cement, JK Lakshmi, they have a capacity roughly around 6 to 9 MTPA for some time now. If you look at the last point that we have that sets apart Shree Cement as compared to the other counterparts, it's the lower average capex per ton. Shree Cement right now, over the last 5 years, if you take an average of that, the capex is around 3,961 rupees per ton, which is way lower as compared to an average of around 5,600 rupees per ton, essentially because of two things. It's going small and regular on expansions, because of which the balance sheet is not stressed. Also, most of the organic expansions, they happen through internal accruals. Upcoming expansion also is coming in, on account of internal accruals and the QIP issue, which is proceeds of which would be used. But on the downside, if you look at the recommendation or the buy recommendation that Shree Cement has, that number has come down substantially from what we had earlier, to an account of two things. That's most of the analysts now think that the margins have been peaking out, and also on account of expensive valuations.
All right. Thanks a lot for that, Nikki. So that's with regards to Shree Cement, and maybe there is a method to the madness, the kind of move that Shree Cement has had vis-a-vis some of its peers. Mr. Chokalingam, you look at cement pretty closely. What's your thought on Shree Cement? It's entering the Nifty, yes. Is it a money-making investment?
Certainly not. I agree with you. There's a madness. There are many instances where stocks which were knocked out of the benchmark indices have done well. There are instances where stocks added into the index done poorly. So it's a mixed bag. It doesn't assure you the gain. That's why even if you look at Nifty, at least 1/3 of the stocks are severely underperforming, despite being present in the index for many years. So what one should look at is the valuation. I mean, giving 80,000 crore market cap for a commodity turnover of maybe around 14,000 crore or 15,000 crore is really madness in my view. But of course, if people are chasing the low float stock, they keep moving up. And analysts like us only look like mad, but that's a reality. But I will not touch the stock.
Okay, that's Shree Cement for you. 1 month, the stock's moved up 26 odd %. It's, I think, just a little short of its all-time high, 52-week high. 25, it made it an early morning trade, but then from there it's come off, I think. 25,300 plus or thereabouts is its 52-week high. Shree Cement, that's the one we're talking about. Yes Bank is the other one. I mean, that's the one that moves out of the index. Choco, you have a comment on Yes Bank?
It's very difficult to take a fundamental view without December results because there will be maximum pain from this latest quarter. At the same time, I don't think the system can allow complete failure of bank of kind of size S Bank has. So the investors who are holding on to it may continue to hold it. It is worth taking risk. The investors who can take a significant risk can even consider it, because I am of the view that neither government nor RBI can allow this kind of bank to fail completely. So the support will be coming in all possible way within the laws, and it might survive and succeed in the next 1 to 3 years. So therefore, risk-taking investors can buy S Bank.
Okay. 35 rupees on Yes Bank, and this one's it's a yin or yang, definitely, for a day trade, and nothing can be said much in terms of a fundamental call on the stock as yet. Vodafone Idea is the other one that I want to take a look at. These two is a stock where on a daily basis, very difficult to gauge the trader's direction. Today the stock's up 38%. I mean, 1 rupee move, but
it's a 38% move.
It's a 38%.
It's a strong move, nevertheless.
Yeah.
I think that effect is being seen on Grasim. It's being seen on Bharti Infratel. I mean, typically nowadays those stock movements are linked to what Vodafone Idea does and the sentiment around Vodafone Idea. And look at the other two too. I think there's tremendous bounce back in both of them. So let's wait and watch what happens here. But strong move, nevertheless. Manav Chopra, difficult one. But let me ask you, Bharti Infratel or Grasim? I'll spare you Vodafone Idea.
See, looking at the charts of Grasim, yes, the stocks are bouncing. The stock is bouncing from its very important support of 715, 720, and earlier the stock has taken a support at this region and rallied towards the levels of 800. Overall, Grasim has been in a sideways range bound territory, and since it's bouncing from its support levels, and we have seen the price break out to its previous 2 days highs in a single trading session, it definitely confirms there would be some sort of short covering rally that would eventually come into the picture, and we could see some sort of a short-term rally on the upside. This could also be a good BTST trade to be taken today. Infratel is one stock. In fact, when we are looking this on a medium-term perspective, the overall structure looks quite weak. The prices are still in a structured downtrend, forming a series of lower tops and lower bottoms. And on the upside, as long as the prices trade below the levels of 235, 240, I don't see any reason to go long into Infratel. In fact, given a choice, one should look to exit the stock on the higher levels. And I sense that the structure would eventually see some more selling pressure, and eventually the prices would even retest its lows of 200 and 180 once again. So Infratel is definitely an avoid, and Grasim could be bought at the current levels.
Okay. Choka, would you be constructive on Bharti Airtel in light of the current scheme of things?
I won't suggest buy. I mean, those who are lucky to hold, they may hold, but otherwise it's better to book profit. For two reasons: it's almost doubled, and valuation comfort is not there. And two, the market is assuming the death of Idea Vodafone. Of course, even I cannot take any view on that. But I am of the opinion that the government may not allow duopoly in this country, considering the fact that we have 130 crore people. Duopoly's market structure may not be conducive for this kind of society. So in case the helps and support comes in and Vodafone survives, I think the kind of relative valuation Airtel enjoys now is not sustainable. So therefore, I would suggest booking profit in Airtel.
Okay, book profits in Bharti Airtel. Mr. Chokalingam, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. By the way, the other set of stocks which are doing very well are some of these asset management, wealth management stocks, and Hdfc Amc, Nippon Life Asset Management, as well as IIFL Wealth. All three have actually had a really good run. The last 1 month, Nippon Life and IIFL Wealth clearly shining, but in today's session, all three are doing well. So therefore, the difficulty out here, Aditya, which one is a better chart?
So considering the movement of all the three stocks, at the moment I will go in for IIFL Wealth. That looks well placed for a further upside from current levels of easily. I'm looking at a target of currently it's at 1620. I'm looking at a target of in excess of 1800, closer to about 1860 to about 1870 on the upside, which gives me a decent upside. Moving to Nippon, it's already shot up 11% in trade today at the high point of the day. So I'll not buy at current levels. I'll wait for a little pullback closer to about 415. Then I'll initiate a fresh long. It's a very strong looking chart without a doubt. Continues to make high rise, high lows in an uncharted territory. It's trading at currently. So the next level of resistances which I see is somewhere between 450. It's just a matter of 18 rupees from current levels. So for that reason, I'll not go long on Nippon Life at current levels. The third one, Hdfc Amc. I believe there's some more consolidation which will happen in Hdfc Amc before it eventually breaks out of that zone. So on the upside, 3500, 3475 to 3500 is the fulcrum where it will face some supplies again, and on the downside, somewhere between 3200 is the good demand zone. So it will oscillate between this 3200 to about 3500 for some time before it eventually breaks out. So clearly, out of the three, IIFL Wealth is the top pick, followed by Nippon and Hdfc Amc.
Okay, stay on, Jaman. So much more to talk about. These are a set of stocks which you need to monitor. Aditya believes IIFL Wealth is the one to look out for. By the way, Devina was talking about how some of these internet-based companies and having that kind of business model is doing well. IIFL India is at 2262, up 10.7% in the session today. So, well, it's IRCTC is not alone. There are others giving it company, and this one is no different.
And IndiaNivesh is the other one.
Yeah, which is also doing remarkably well for itself.
Well, not in comparison, it falls pale in comparison.
Yeah,
to
but it's had a good run in the recent past any which way.
Phenomenal. I mean, post-listing, it's just gone one way.
Okay, I hope we're not taking stocks out of Sharad Dubey's list of the Fab 4 stocks of the day. So let's go to him. Sharad, was IIFL India part of the list?
Well, no. Well, the first stock is Aurobindo Pharma. The stock is buzzing in the space today. The stock is up almost 19% today, jumping its most in its decade after getting US FDA relief. So basically, this was for the Unit 4 plant in Hyderabad. This plant has maximum pending ANDA approvals, and this augurs well for the company going ahead. Up next is Torrent Pharma. That's also up almost 4.5% after seeing a fresh launch. We're seeing with a high open interest coming in at almost 34%, and the volumes, coming in at almost 2.5 times its 20-day average. The next stock is Voltas, which is up almost 4.4%. It's seeing its biggest winning streak, in the 4 months itself. The stock is up almost 30% in 2020, and the stock delivered a healthy revenue growth of 33%, outpacing its peers, which came in at almost 30% as per Investec report. And the last stock of the day is Nippon Life AMC, which we are discussing. The stock is up 10%, hitting its lifetime highs, and the stock has also risen by more than 13% in the past 2 sessions. Back to you.
All right, Shara, thanks very much for that. Those are the Fab 4 stocks of the day. DLF today is doing okay for itself. It's up about almost 4%. Inox Leisure is at about 485. BHEL sees some relief. That stock's up about 2%. Max Financials up about 2.5%. And look at LIC Housing Finance. The last 2 or 3 sessions have not been particularly kind in terms of the kind of selling that's come into the counter. Today as well, it's just about staying afloat, about closer to 1% or so higher, 366 on LIC Housing Finance. Is the downside open for this one, Manav, LIC Housing Finance?
See, looking at this formation, at least for a short-term perspective, the prices have actually seen a sharp sell-off from its recent peak of 445. It has definitely breached its key weekly support zone. From last couple of trading sessions, the prices are consolidating, but I don't sense much of an upside. Maybe there could be a short-term bounce since the prices are at the oversold level. So on the upside, 380 to 390 would be the important resistance range. We could expect a good trading bounce only if it exceeds and closes above 390. So till then, I think till it's trading below the levels of 390, there could be a negative bias into the stock, and one can still expect selling pressure at higher levels.
Okay. Well, watch out for some of these names like these. Now, we've spoken about stocks which have gained quite a bit all through the show today. Let's also pour a little bit over the losers before we get on to one more market. I just want to mark 2 or 3 names and the way they would have reacted today. So Avanti Feeds is down about 7.5%. Tata Motors DVR is correcting quite a bit, about 3.5% lower in trade. And Future Consumer continues to languish as well. By the way, while the other Network 18 group stocks may be doing okay, TV18 is down today about 2.5% at 28 rupees. So the others are fine up, but TV18 broadcast is down about 2.77% on very high volumes, I might add. But time now to get in one more market voice and one more opinion. If the coronavirus outbreak extends to March, the global earnings and GDP forecasts will have to be downgraded. That's the word coming in from Andrew Holland. He adds, the markets have still not factored in the disruption that coronavirus can bring in. Listen in.
If it extends itself beyond March, I mean, obviously the situation would have probably worsened from where we are today. And I think globally, the kind of linkages will become quite severe. And obviously you'd have to start looking at reducing not just earnings forecasts, but GDP forecasts. So I think the range is from the best case scenario. I want to say the best case scenario is that things start to resume to normal and there's a V-shaped recovery. Then it would knock anything from 0.2 to kind of 0.3 from GDP growth. If it extends onwards and becomes more severe, then I've seen GDP figures go globally actually halving from where we are today. So it depends on where you think the virus is going to continue or not, or whether they'll find a vaccine. And I think the problem for the markets is that at the moment we're working on the basis that it's under control. The number of cases has started to fall, and recoveries are improving. But of course, all of this data is coming from China, and so no one's really truly believing everything that they see, and that's what's keeping markets kind of more optimistic that it's all okay. But if it's not, then I don't think the markets globally or locally are factoring in the kind of disruptions you could have across many different industries. It's not just the kind of usual tourism, luxury goods, and travel, so and airlines. So that's where the problem lies, is that we still don't know, and the risk is obviously more to the downside than it is on the upside in terms of news flow.
Andrew, you make a valid point about how unpredictable the extent of damage and the extent of the spread of this would be. Now, two factors, Andrew. If we do not know when this coronavirus issue can come to an end, and therefore we do not know the question is therefore if that is the case, how do you pencil in the economic impact and the supply chain disruption impact that could come in for companies? Because we might well have the virus contained, but earnings of companies which might be affected because of the supply chain might linger on for at least a couple of quarters.
So again, it goes back to the timing of when you're saying that things are starting to recover, right? Because obviously if you're saying that it's contained, then factories will get back to work in China and so forth and so on. And that would be the good news. So I think what the market's saying now is that, even if you take March as kind of a month which will maybe still be a washout, that by the end of March everything will start to recover, and you'll get that V-shaped recovery both in kind of what's happening in China, manufacturing, and therefore the supply chain as well. So that's what the market is really banking on. And as an aside to that, if things don't work out, then the more optimistic forecasters will say, well, it's okay because the Federal Reserve and all central banks will reduce interest rates. So there'll be support that we just seen in Singapore, where they're increasing their fiscal deficit to support the overall economy. That you'll see more. So that will be more positive for the markets in the very short term. But again, it depends on when you think timing of this virus will be contained, or there's a vaccine come about, or we're all back to normal. So I think we're another 2 or 3 weeks away from knowing some of those facts. So I think the markets will play on the more optimistic side, obviously, that things are being contained and that will move forward. So the numbers I've seen are quite scary from the kind of disruption if you continue it on, because obviously auto parts is a global factor, and Hyundai have shut their plant in Korea. So it'll have a big impact on a lot of big heavy industries, which is not really being taken into account at the moment.
Andrew, it's a small space, but I wonder whether large money bags are now talking about it actively, and that specialty chemicals somehow has seen a flurry of good results and some fairly high HNI activity. What is it that a large company or a large fund like yours thinks about when it looks at that space?
Yeah, it's not a space that we've really kind of been looking at, because we tend to look at the largest companies, and they don't really kind of fall into it. I think a lot of it's linked to what's happening in China, and again, I think that if this continues, then there could be disruption in the chemical sector as well. So it's not a sector I know well, so I can't really comment in great detail. But it's not on our radar. It's more of kind of small and mid cap in terms of the stocks to our mind.
Well, that's Andrew Holland with his views there on the markets. Yogesh Mehta of Yield Maximizers is joining us on the show as well. Yogesh, good afternoon to you. A lot of moving parts to this market, particularly from the broader market space. While we've seen a positive market breadth, do you feel like it's still more prudent to stick with the larger names, well tried and tested?
Good afternoon, Devina. Since broader market participation we are seeing last 2 months, and the value stock and the consistent growth story about the consumer sector and other sector like cement and pharmaceuticals and the private sector banks, I feel that now the growth story remains not the subdued one, but at least the limitations would be there. So I am preferring more on a broader market space where still stocks are available with a reasonable growth story intact, and we have seen in a couple of last 1 or 2 quarters or so, and even in chemicals also. So I think rather than chasing value right now into a large cap companies where already they are at a high P multiple, and the growth is projected to be to 10 to 15% growth rate over the next 2 years, rather I will pick and choose for our portfolio returns on a broader market space where mid cap companies are available at reasonable valuation, and of course with a decent growth factor as well.
What about mid-cap companies with not so decent valuations, which you may have in your portfolio, Yogesh? So let's say I'll give you 3 names: IRCTC, Nippon Life Asset Management, and IIFL Wealth.
I would say Nippon Life is the one where I believe that they are the number 2 AMC company, and now since the management has been totally changed, it is 360-degree change, and that will provide a more value becoming MNC, and yesterday also it has been included into the Nifty MNC basket. So that gives good confidence among investors, and it is in my portfolio, yes, and I believe that there is a long way to go, because there is a number 1 and number 2 AMC company. There is a wide difference, and in terms of valuation also, and in terms of the AUM asset they are handling also. So even if I believe that there is a long way to go for asset management companies in terms of mutual fund and as well as PMS, then AIFs, I believe that this is the company where valuation will play a secondary role, but the growth will play a decent role here. So yes, Nippon Asset Management, even we spoke last time, I am having it, and still I believe that there is a long way to go for this.
Okay, Nippon Life is the choice there.
I was actually wanting to ask him, because he has been somebody who's recommended IRCTC, that at these levels after the run-up, is he looking at booking profits, or does he believe in the long-term prospects, Devina? Because the valuations, Yogesh, are a lot more punchier than what they were, but nowhere close to really stratospheric valuations on FY21. Would you hold IRCTC if you had it in your portfolio? Would you buy it more looking at the growth prospects, or would you take some money off the table?
Definitely, I will take some money off the table from here at this valuation, 1,800 rupees per share. And even if I consider that 550 or 600 to 650 rupees would be the crore would be the profit for this company in FY21 because of the convenience fee and the hike into the meal tariffs. All put together, I think everything is priced in right now, but yet people are chasing growth, and that's why they are giving more valuation to that. And that's why we are seeing the sharp run-up, steep run-up, and 4 months it has been from 700 to 1,800 today. So it's a craziness. But I would say that those who are holding it, just take your capital out of it. But rest, one can still ride it for some more time, because the annual result would be more bombastic and can have better price in front of you. I think 2,100, 2,200 would be the last mile, at least if it comes in next 1 or 2 months, then one can book full profit out of it.
All right, and while we're talking about booking profits, just look at the way the stock's moving. It's at 1827 now, and just as we were hearing your answer, Yogesh, the stock has started to move up at 1825 now, and it leaves you speechless for a while and wonder, what are the right boxes that it's ticking.
Yeah, well, higher return ratios, good growth.
Oh, definitely, like 50% ROCE.
Yeah, and good growth. But today is just that kind of a day, Devina, I think. I mean, just look at the names which are hitting those highs, and almost everything has a higher return ratio element to itself. So HUL is at life highs. Bajaj Finance is 2.5% at life highs. IIFL Wealth and those businesses, the wealth management businesses, anyways have great return ratios and quality of flows. But IRCTC, AFL, there is GMM Fodler, all of them doing well. And then, of course, so since we're talking about railway-linked stocks, I think Aditya pointed out, Ircon International, somebody that we spoke to 2 days back, is up 6.5% at 591. That too is doing well for itself. So really good going out here.
I think more so, what Vinay was talking about earlier on the show is that you take that impact cost because it's a very low free float stock. So if you're of the opinion that the stock is going to give you that kind of return, I mean, you're going to have to take an impact cost of 10% or so if you want to enter in the stock. And probably it's, I guess, that feeling of missing out and not being a part of the move that it's already come out to, but listing at 400 rupees to 1850 where it's currently at, there's nothing short of 1 year before.
Yeah, it's really good performance, Dana. You have to admit, 12.5% up now, 1838. But since we can only talk as much about IRCTC, and we've done that enough, what about Ircon International, Aditya?
Oh yes, it definitely takes the check boxes, all the check boxes which IRCTC have taken. So looking at an upside of, one can go fresh long, in fact, at current levels also, with a target of 630 to about 675 on the upside. Another beautiful looking chart for you, which definitely should be on everybody's radar with the stop loss at 550, you go long. Another one which is looking very attractive at the moment is Voltas. It's broken into life highs probably as we speak. The smart up move of 5.5% up move backed by extremely healthy volumes. One can look to go long in Voltas as well at current levels, looking at a target of 800 on the upside with a stop loss somewhere below 720.
Okay, well. Let's talk about some other names as well. I think there is merit in trying to talk about what could be happening to some of the steel companies as well. By the way, for all our viewers who are tuned in right now, our homepage has a number of pieces around some of the commodity names. JSW Steel is apparently suing the Trump administration. And some of the commodity names by and large seem to be doing okay in the session today. There's a query that has come in about Tata Steel as well. It's a good one actually to talk about. I was looking at the NSE Metal Index, so the BSE Metal Index, and after gaining about 28-29% from the lows, the index has given up nearly 50% of those gains that it had from the lows of August 2019. Yogesh, what would you do with a company like Tata Steel currently? Is it giving you an opportunity, or because of this whole issue surrounding coronavirus, you rather leave commodity names alone?
Neeraj, for the time being, I would leave this space, especially commodity space, but I like Tata Steel and JSW Steel, in fact. But due to this coronavirus issue, I think there will be some lingering issues will be there, and probably there will be a hangover for a temporary reasons. But on a longer term, if it is correcting around say 400 to 450 level or 450 level currently, it could be a accumulate one if somebody is really looking at for 2-3 quarters more on the extension way. Then probably there would be a 550 or 600 kind of level one can see, because the cost cutting measure they are looking at and the UK business is now back on the track, and even the domestic demand is also improving due to a lot many infrastructure activities going on. So that domestic as well as the UK business both will be doing very well over next 2-3 quarters. So for the shorter term period, it could be accumulate zone. But due to this corona, you are getting this price that is advantage.
Okay, yeah, well, but the other steel stocks are doing maybe reasonably okay for themselves. Manav, you want to come in on these metal names, and if there is a trade here, are there better names to trade?
We have already seen a good amount of decline in the metals. In fact, a stock like Tata Steel is right now currently trying to take support near its long-term averages. It is having important resistance at 440. So once if Tata Steel breaches 440 on the upside, could eventually see a short-term rally on the upside, which could also be seen with some sort of a short covering. The only stock which has been seeing good amount of momentum is Jindal Steel. You know, the stock has also seen a good bounce from its intraday support levels and has important support at 180. So one can buy Jindal Steel even at the current zone. So I expect if the metal index sees a good bounce back, this is one stock which could actually see a good amount of outperformance and even eventually go towards its recent swing high. So a stop loss of 180 for an upside target of 195 would be a buy on Jindal Steel at the current levels.
Okay. Do watch out for that name as well. Amongst the index names, of course, or the non-index names as well, I think one pocket that is doing very well today seems to be life insurance. At least HDFC Life, I think, is up about 2.5 or 3%. So after a while, these stocks come out of a slumber. SBI Life should also come up on your screen. Remember, post the budget, these stocks got a bit hammered, and in today's session, they're rising in tandem, 938 or 939 for SBI Life. I wonder if ICICI Pru is doing that, up about 3.5% too. So these stocks certainly have some traction. Yogesh, I know you're invested in one of these. The question is, did you use the dips to add more? And if you haven't, would you still be comfortable buying into any of these life insurance or general insurance companies?
Yeah, definitely, Neeraj. This is the sector which I'm looking at for next 5 years or so. So any dip, even on the budget day, I can have a disclaimer. I have bought that stock on the dips, and still I find that stock at a deep value. And even if I compare the 9-month HDFC Life, if we compare the 9-month AUM is around 1.45 trillion rupee, and even the solvency ratio would be around 177% or maybe plus minus 2%. So I believe that the ATC, 1.5 lakh rupees limit was there for any type of investment, equity, ELSS, or the insurance or any other. That is not going to dampen the business or the sentiment per se for this insurance company. And that's why I believe that the story is here to stay. And overall, 42,000 crore of premium collection, I believe that would be there for FY21, and probably it was 29,000 in FY19. So I think PAT will grow to around 1,900 crores from 1,350 crores in FY21. So that's the kind of jump I'm looking at. And on the premium valuation, it is, yes, available at around 4.2 times price to embedded value. But that is fair valuation, I believe, because the growth is equally good. So I would say those who want to still invest into any of the sector and not invested can, for 3 to 5 years vision, then definitely HDFC Life, even in terms of general insurance, ICICI GI, both provides a good opportunity, at least for next 3 to 5 years.
Okay. Well, news bits as well. Thanks so much for that view, Yogesh. That's a set of stocks that you need to monitor. Before we get into the next piece, Aditya, you want to come in very quickly on any of these life insurance companies, any stock which is worth a trade?
Probably ICICI Pru or ICICI Lombard, both look definitely good on the charts. ICICI Pru can notch up to levels of 520, 530, which was its previous peak. It can inch there, so a buy can be triggered out here with a stop at 470, targets of 520, 530. Lombard is a better pick. I would go in for a Lombard for a target of 1450 to about 1500 on the upside, with a stop loss just below 1340.
All right, we'll come back to your closing ideas as well. But in the meantime, the SBI board has approved a restructuring plan for Suzlon. Vishwanath Nair joins us on the show with more exclusive details on the same. Vishy, over to you.
Right, so the SBI board, which has been mulling over this restructuring plan for Suzlon since last week, has finally given its nod to go ahead with this restructuring plan. Now, the restructuring plan itself consists of about 68% of the company's debt of nearly 13,000 crore. That will be converted into convertible debentures, while the remaining debt will be restructured. Some portion of the debt will also be converted into equity, thereby giving the lenders a minority shareholding in the company. The expectation is that once the restructuring is completed and the company turns around, then this equity can be sold in the market, and some upside can be earned by the bankers eventually. However, this is still a large haircut, and this is only the first step in the entire restructuring plan, because SBI, being the lead lender, has given its nod, but the remaining lenders in the consortium are yet to look at the plan and give their individual approvals as well. Once that happens, only then can the plan be implemented. Remember that this entire restructuring proposal was being done under the RBI's June 7th circular. So last year in June, the lenders had signed an integrated agreement for Suzlon, which gave them 180 days to resolve the company. That 180-day period ended in January. Now, if the other lenders do not approve the plan before March 31st, then everybody in the system will have to make an additional 20% equity, 20% provisioning against the loan outstanding that they have for the company, and that will be painful for the banks. And of course, that is also they are also trying to avoid insolvency for Suzlon, because typically power companies do not fetch a lot of returns once a company goes into insolvency. So as of now, first step in the restructuring cleared. Let's see what the other lenders have to say.
Interesting story, an important one from a lender's perspective. Vishy, thanks so much for putting this into perspective. And I'm sure viewers, you've seen this news now out here. In some time, you can log on to our website and try and read more about this as well. It's an important development. By the way, just before I get to our experts, I can't not talk about Irctc yet again.
I thought we were done talking about it.
We were done talking about it, but it's just the nature of the move, Devina, that brings one to talk about it again and again. I've seen frenzy buying into a clutch of names, really, but this leaves one speechless simply because there was frenzied buying in Irctc ahead of the numbers, then a bit of a pause. Post those numbers, it's again resumed an up move, and just look at the gains. Now pull up the 6-month performance of Irctc. Yeah, 1 month. That actually tells you the story. You don't even need 6 months. 1 month. 80%. We've seen some other stocks also do this. For example,
no,
GMM
you need 6
Fodder.
months. You need to see 6 months.
Yeah, 6 months is also pretty impressive. Well, 3 months is about 105%. 6 months since the IPO listing, I think it would have gained about 3 times or whatever it is. It's done really well. But I think in this last 1 month, we've seen some quality names really get this buying. So Irctc 1 month is about whatever 80%. GMM Fodder in the last 1 month as well has actually had a tremendous run. So some of these names which either were under-owned or people believe in the certainty of growth have actually done very well. But without much ado, first let's get in the closing strategies, because we have only 6 minutes left today for the show to end. Manav, I'll come to you first. Your top closing strategy.
Yes, my first buy call would be a buy on Jubilant Food. In fact, the prices after good sideways consolidation has seen a good breakout on the daily charts and is closing above its important levels. I sense on the near term the prices could see a short term rally towards the levels of 1950, which is our target price. One can maintain a buy with a stop loss of 1870 on the lower side. The second buy call would be on Divi's Laboratories. From the pharma space, this is one stock which has been a very good bellwether, and now the stock again manages to exceed its important resistance level, and eventually we expect this upside move to continue. It's a buy with a stop loss of 2160 on the lower side for an upside target of 2260.
Okay, so watch out for Divi's Lab. It's a buy call. What about you? Your top call?
Looking at Asian Paints, it's a good sharp up move at the closing time. My sense is one can initiate a BTSD in Asian Paints at current levels of 1890, looking for an upside of 1950 about 2000 on the upside, with a stop loss at 1850 on the downside. The next would be HDFC. The stock has been buzzing and it's almost at the high point of the day. My sense is this is a good up move that the stock is posting, and mine is just test levels of 2415 to about 2450 on the upside. So buy for a target of 2450 on the upside with a stop loss at 2350 on the
okay. Let's talk about some names which are top of the mind of the markets right now. Avenue Supermart should be there, should pull up that stock. The QIP is done, and the question mark would be whether it will see a time correction or no. But 2.5% right now, 2427. Quick thoughts out here, Yogesh. Would you buy an Avenue Supermart here? 2427.
Nearly all the stocks which I'm discussing is in my portfolio. I would say I'm holding it since the debut. I would say that OFS, which has happened now, that was the last hangover the way we have seen in HDFC where Standard Life has sold. So this last tranche has been absorbed at 2316 and 2320 level. So further, I don't foresee there is a liquidity will be available for those who wants to buy into their portfolio, and sustainable valuation will remain here, and the growth is there for at least the next 1.5 years, at least 4 to 6 quarters, and the incremental store addition about 7 to 8 every quarter, or maybe the pace will be higher. Now their penetration is more into geography way. In Delhi also they're opening a store, so now it will be a slowly a pan-India level. I think growth is immense in this company, and 8.5% margin is here to sustain there. And I believe that there is an immense growth for this company.
Okay, we'll leave it at that, Yogesh. Thanks much for taking the time out. Before we start wrapping up the markets, Aditya, a lot of stocks flying around. Quick thoughts, any chart that looks interesting?
Probably a Fairchem can be bought at current levels for a target of 700 with a stop loss at 610.
Okay, Fairchem Chemicals. That's the call that Aditya Agarwal is giving. It's a last-minute call, but do look at this one. The charts, according to Aditya, are looking attractive. But we'll talk about some of the mid-caps in a bit. Let's first talk about how the markets are shutting shop today. About 1% higher for the Nifty and the Sensex. The Nifty Bank up about 1%, nearly 1%. So it's actually a very good close that we are having in the session today. The mid-cap and the small-cap indices should also come up on your screen. After 4 days of underperformance, we're actually seeing an outperformance from the mid-caps and the small-caps. It's good to see positive market breadth because we haven't quite seen that in the last few days. But let me talk about the large caps and what's moved. Bharti Infra up 7%, Grasim up about 4%, Coal India 3%. There is strength in Z and Cipla. Bajaj Finance is up 2.5%, too, really good going, and Reliance Industries has participated today, up about 2.5%. What is not done well? Precious little. Tata Motors 2% lower. Bharti about 1%, TCS about 0.75%, Maruti, UPL, some of the others which have gone down today. But really the day belongs to the gainers, and as much as the large caps have gained, just the flurry of activity that we've seen in the mid caps at times leaves one spellbound. Devina, not just the quantum of the moves in stocks like Irctc, but the ferocity of the move that we've seen in some of the others as well.
Yeah, completely outpaced the benchmark index today. In fact, there was little or negligible interest for anyone to look at the larger names and how they've performed today. We had to really scout for some of those the big movers. But within the broader market space, it was a day of the mid caps and the small caps, 1.5% higher on both the indices, looking extremely strong in today's session. It was a good comeback after missing out all the action over the last 4 trading sessions. So starting off with the big moves coming into, and need not mention Irctc is the first stock that we're talking about, closing with gains of about 14%. That's 1863. We're talking about analysts putting out Diwali targets of 2,000. It's a very quick approach already. Vinati Organics is the other one. We got clarifications from the management with regards to any negative news and negative impact on the supply chain from the coronavirus in China. They have denied it, and they've in fact said this is going to be a positive because this affects competition and not them. That stock's up about 4.5%. Vodafone Idea, 40% move on this stock, probably value by coming in at those lower levels at about 3 odd rupees that it closed at in yesterday's session. So that's 40% for Vodafone Idea. You've got Den Networks, Hathway, a second year not short. Both these counters locked up on upper circuit and doing really well. Trent, this one looks to be, more of a value buy. The growth potential extremely strong. You've seen good numbers as well, and that's driving a lot more interest in the stock. 775 for Trent. Indiabulls Ventures, Aurobindo Pharma. On that unit 4 and the lack of the not being a severity in the US FDA observations, and that's kept it buoyant in today's session, 20% higher. Walcott also up 9% after taking a breather over the last 2 or 3 trading sessions where it was down, profit taking, and the stock's now up 9%. Ipca Labs, First Source Solutions, Parag Milk Foods, the list can go on, but need to also highlight some of the losers that we saw in today's session. Sadbhav, disappointing numbers, and 2 days on a trot the stock sold off. Avanti Feeds is profit taking and heavy profit taking at that. Hexaware, Tata Motors, DVR, these are the stocks that are looking weak, and then Lakshmi Vilas Bank down about 5% in this session. But that's what you've got. But it's clear show of the mid caps today.
Clear show of the mid caps today, and much warranted because they've been underperforming in the past few days. Let's see if this becomes a trend or is this a one-off. But just the nature of the move suggests that there's some active buying in a few of the mid cap names. Bring up the advanced decline ratio firstly. That should come up on your screen, and then the volumes. Well, the market break. A near reversal of yesterday's session, Devina, because we were
and it stayed stable till the end.
Yeah, so it was 1:2 in favor of the declines yesterday, 1:2 in favor of the advances, and you're right, it stayed this way. It's not like a gap which is just opened up in the late trade. It's been positive throughout the trading day today.
All right, and that's what you've got in terms of the turnover. It's almost at par in terms of the cash market turnovers when you compare it to yesterday's numbers. NSE F&O turnover this week has been on the higher side, and tomorrow is also the weekly options expiry, so ahead of that you will see a larger number. Tomorrow usually you see a number of about 28 to 30 lakh odd crores on the F&O side. And a quick look at just the point contributions that we look at on a usual basis. Reliance Industries today, and these are the top 3 heavy-weighted stocks on the index. But really, who's talking about the index?
Yeah, we aren't, but when these 3 participate, it's very difficult to have a day which is in the opposite direction. So really, we're going, and then HUL has participated, by the way, up about 10 points as well in the session. And life eyes, by the way, is Hindustan Unilever. We are not seeing Bajaj Finance here, despite a strong move, because its weightage is not that high, but some really stunning moves out there too. Anyways, final thoughts from our experts then. Manav Chopra, looking at this move, what is best place? Is it the Nifty, is it the Nifty Bank, or is it some other broader market index which looks the strongest?
See, at the closing that we've witnessed today, I think the Nifty index is quite well placed compared to the Nifty Bank. So Nifty has now seen a closing above 12,100 spot, which is quite a positive signal, and nearing to its levels of nearing to its important support zone, which it has breached now. So I sense on the upside 12,150 would be the resistance. So once if we see a break above 12,150 is when you could see a fresh momentum rally coming in. For the Bank Nifty, 31,000 would be the resistance. But good move that we've seen today is come from the mid caps and the small cap space. The breadth for the market has been quite positive. So, but in such a scenario, Neeraj, we would like to see some sort of a follow-on moves. Markets have been quite choppy in last couple of trading sessions, and so now if we see a follow-on move for next couple of trading session is when we could see a good clear trend visible. So at the current zone, I will still want to wait for some more confirmation, at least on the upside, before I take on my shoes, at least to become completely bull on the upside for the near term.
All right. What about you, Aditya?
So yes, Nifty has closed at the high point of the day, but I'll be closely watching out for this level of 12,140 on the upside. That is taken out. Fresh longs definitely can be triggered for a target of 12,200, 250. That happens to be the upper end of the range which market is oscillating. So let's see where market opens tomorrow, and probably if it sustains above 12,140, fresh longs definitely.
At 12,140, that's the key level to watch out for then. Thanks very much for joining us, Aditya, as well as Manav. Appreciate you both staying with us. And on that note, it's a goodbye from Neeraj, myself, and the entire team that's put this show together. Thank you so much for watching.